Going over how to use candlestick analysis. This is used throughout the market when you're trying to just analyze what's going on in the market. Certain moments where you have to look at the candlesticks and understand, if it's going to be, reversing, or if it's like continuation candles, what they mean, just the basic overall understanding of what candlesticks mean, candlestick analysis. So let's just go ahead and get right into it. The first and foremost thing I'm going to show you is engulfing candles. That's where we're going to start. So engulfing candles are the pretty much the most important thing that I use for like entries and stuff. So what is an engulfing candle? An engulfing candle is something like this, okay? So you see these two candles right here. These two candles right here, right? You have this candle, this candle. This bullish candle, this green candle, its body is almost twice the size of the previous bearish candle. So just like the name, it is engulfing the previous candle, okay? It's engulfing the previous candle. So like the body of this candle is engulfing, it's larger, it's covering, it's dominating this candle, okay? And then you can just find multiple examples of that. Here's another a bullish engulfing candle. It's because it's bullish and it's engulfing this bearish candle. Bullish engulfing the bearish. Another little example here, bullish, it's engulfing the bearish. Another one here, it's bullish engulfing the bearish, okay? And you can find these throughout the market pretty much everywhere. Sorry, ignore all of this previous work, but bullish engulfing, right? Bullish engulfing, okay? That is a bullish engulfing formation, right? So what is a bearish engulfing formation? It's the exact opposite. A bearish engulfing formation is the exact opposite. So you have this bearish candle is engulfing the previous bullish candle, okay? You saw how on this one it was the bullish candle engulfing the bearish. Here it's the bearish candle engulfing the bullish candle, okay? This is kind of doji right here, this candle, but you have a bearish candle engulfing the previous candle. The bearish candle is engulfing the previous candle. This bearish candle is engulfing the previous bullish candle, okay? This bearish candle is engulfing the previous bullish candle, okay? So that is a normal, or an example of normal engulfing candles, both bullish and bearish. Now, the next one we're going to look at is called a bullish or bearish variation pattern or candle. So let me see if I can find one. Okay, so a bullish or a bearish variation engulfing candle formation consists of 3 candles, okay? So you have this bullish, then this bearish, and you see how this bearish candle didn't engulf the previous candle, but then on the third candle, it did. On the third candle, this candle engulfed this candle, this candle, like both of these candles, the next 2 candles engulf that bullish candle. This is called a bearish variation. So you saw how I just showed you previously, like this candle right here, a bearish engulfing candle, just 1 2 1 2, a bearish engulfing, 1 2, a bearish engulfing, 1 2 1 2, bearish engulfing. So right here is kind of the same concept. You have a bullish, but it's 3. So it's bullish, bearish, bearish. It's engulfing this previous bullish candle. This is called a bearish variation. Okay, a bearish variation. See if I can't find a bullish variation. See, kind of similar concept here. You have on a bearish variation, you have 1 2. The third candle drops here. This is kind of like a bearish variation because it's 1 2 3. It didn't engulf on this one, but on this candle, it engulfed this bearish bullish candle. It engulfed that bullish candle. So that's like another example of a bearish variation. I'm trying to find a bullish variation. Okay, cool. So here we have a bullish variation, right? I'm sorry, these charts are a little bit crowded right now, but I need all this information, so I'm not going to delete everything, but I'll try to work on a non-pair that I don't really trade that much next time on the next video. But for the most part, now you have a bullish variation, right? So now it's bearish right here. This next candle did not engulf this candle, but then on this third candle, this body right here is engulfing that bearish candle. So 1, 2, 3. This is a bullish variation. Okay, bullish variation right here. Okay. If I can find another one, I will really quickly, but let's just see. Okay, so last one here, another bearish variation. You have bullish, bearish right here. It didn't engulf the bullish candle, but on the next candle, the third candle, it did. So 1, 2, 3, bearish variation. Another one right here, bullish, bearish. It didn't engulf this previous candle, but then on the third candle, it did. It engulfed that one on the third candle. So 1, 2, 3, bearish variation. Okay. So those are engulfing candles, bullish and bearish, and then engulfing or variation engulfing patterns for bullish and bearish as well. Next one I'm gonna go over doesn't happen as often, and I'm not really the biggest fan of using this, but you can see these patterns in the market, especially around entries. And that's another good point. The majority of the times I'm using these bearish or bullish variations or bearish and bullish engulfing candle formations are going to be for like actual entries. So like if I saw like this pattern and not like a bearish variation 1, 2, 3, and I was looking for a sell, that would confirm my sell. If I saw this bearish variation right here, bullish, bearish, bearish, and I was looking for a sell, and everything else I had done leading up to that trade had aligned and told me to take this position, I'd be looking to take that sell. If I was looking for a buy right here, and I had bearish and bullish, a normal bullish engulfing, then I would be looking to enter after this bullish candle would close. Same thing here. If I was looking for a buy and I had a bullish engulfing, then I'd probably trade it. I'd enter right here. Okay. Another bullish variation. 1, 2, 3. If I was looking for a buy, I would have entered probably when this candle closed. Ignore all that. Just like I'm saying for the like, if I knew everything was in sync, okay, and I was looking at actual trades. I don't know what's going on with these market conditions right now, but as far as just the candlestick patterns, if I saw this 1, 2, 3, bearish, bullish, bullish, bullish variation, this would be a pattern I would look forward to enter. Okay. So then there are times where you have like a bullish variation, but the middle candle is like a doji. So look at this right here. See, so you have a bearish, then you have a doji candle, then you have a bullish candle. This is kind of like an engulfing, a bullish engulfing variation pattern, except this candle is doji. I do not rely on these. I don't rely on these, but if I see this in the market at times, depending on what's going on with the trade, I may potentially take that trade. But it's not the most reliable, and I don't really use that often. Like I'm not looking for this, but sometimes I'll see this type of formation based upon other things I may enter. And a lot of times when I see this formation, the market will do something like this. Let me change that color real quick. Let's go black. The market will do something like this and then come back down and then give me like a normal bullish engulfing, like something like this over here. And then that's the true entry. So a lot of times when I see this and I say I enter like right here, bearish, doji, bullish engulfing, it's not really the true entry. It's probably going to maybe pull back and create like an actual formation. But the two ones you want to always look for are just like a normal engulfing candle formation, whether that's bullish or bearish, and then a bearish or bullish variation candle formation when you're looking for entries. Okay. So that's that. The next thing I'm going to show you guys is just like exhaustion. So what does exhaustion mean? Exhaustion just means like when you see these heavy wicks in the market, these big time wicks, like these wicks, these heavy wicks, these are all signs of reversal or the market slowing down, losing momentum. Okay. It just means that for instance, if you're going down, the market's going down here and you come down to a certain point, you see a bunch of exhaustion like this, these heavy wicks. It just means that like the sellers are slowing down. Okay. Like the market was dropping down here and then a lot of buying pressure got into the market. So the market is exhausted. It's done. It went for a run. It went for a jog. It started out here half a mile, then it got to a 3/4 mile, then it got to a full mile, and it started getting a little exhausted, and it's like, all right, I'm done. That is what the wicks mean. And you can see the market then went on a jog up, started running up, and then it got some exhaustion here, and then it retraced. A little bit of exhaustion here, retraced back up. Heavy wick, some heavy wicks on the bottom. It didn't know what it wanted to do. Some more wicks at the top. Eventually, it dropped. got all the way down here, had some exhaustion and went up. Some exhaustion here, came down. These wicks are just indicators of market reversal. That's all I want to point out for that, okay? They're just indicators of market reversal. Now, does that always mean it's going to reverse exactly at that moment you see exhaustion? No, but a lot of times, say I was looking for like a buy, say I was looking for a buy and I was charting my buy down here, right? And the market was looking like this at the time, right? And I was like, man, I got a buy position I'm looking for down here. If I was looking right here and I started seeing all these wicks of exhaustion, I would have known either the market's going to start to retrace like that pretty soon, or I would have known that these are just signs that eventually the market is going to consolidate, boom, 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 and then do something like that. You know? So I would have known that going in. So just keep that in mind when you're trading, and when you're looking for like signals in the market. Exhaustion is a good sign that you can use to help you understand whether or not the market's going to be tracing back up to a level or retracing or whatnot. It's just a good tool to use. Okay. So you have some more exhaustion right here, kind of in your entry area. Say, let's just pretend, and then eventually the market started shooting back up. Some heavy exhaustion, kind of shot down for a second. And like I said, the exhaustion, like nothing in the market, if you see one thing, that does not mean that the market's going to be retracing or doing something. So you can't just say, oh, I saw some exhaustion, I'm going to take a sell for the long term. No. Like that's not the case. But it's a signal. It's a signal, okay? The same way this market started slowing down, it was dropping. Oh, damn it. The market was dropping this entire time. It was dropping, and then boom, 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 exhaustion. It slowed down. So it was really aggressive up here in this range, and then it started seeing exhaustion. So it started consolidating, dropped a little bit more down into this range, and then eventually shot up. And then right here, you see a whole bunch of exhaustion as well on the bottom, and then boom. So if I was charting a buy, like I said, I wouldn't be basing it purely off these exhaustion candles, exhaustive candles. I would still be looking for potential. That would be a sign that maybe the market's going to slow down and I can start looking for the buy. Okay. Next, I'm going to show you, if I can find any, another variation engulfing another variation pattern. This is like these patterns consist of about 4 candles, and I don't necessarily use them really. Like I don't trade like this type of pattern that often, but you do see them at times and they can be used, but I gotta find one. They're not as frequent as some of the other patterns. If I can find one, see, I have to. Okay, so here's kind of an example, okay? So sometimes what you'll see, and I don't like, when I'm looking for entries, I'm not basing like entries off of this, but I just want to highlight this because technically these are like a form of a variation. So it's a form of a variation. So this pattern consists of 4 candles. So you have 1, 2, 3, 4. The same concept I told you about for the variation with the 3. So we have one right here, right? So bullish, bearish, 1, 2, 3. The bullish candle, then the bearish candle does not engulf it, but then the next candle engulfs it. It's the same concept except 4 candles for this last and final variation pattern. So you have bearish, then you have bearish, then you have bullish, and then the 4th bullish candle like this engulfs 1, 2, engulfs these candles. This is another variation pattern, okay? So again, you have 1, 2, bearish, then bullish, and then the final 4th bullish candle. And it'd be ideal if it like cut off like right here, like everything above that line didn't exist and it was just like this. If it looked like that, then this is more of like a maybe entry, but for this example, I wouldn't be taking an entry way up here based on this variation pattern. I probably would have been in the market before that, but bearish, bullish. This is a variation, another form of a variation. But like I said, I don't see that often, but I just wanted to point that out. And I'll look for a bearish variation, like that example. But if I don't find one, then I'm just gonna have to skip out on that for now. Okay, perfect. Thank God. So we found one right here. Cause see, that's what I'm saying. They're pretty rare. So like you don't really see them that often. But four candles, right? So bullish, bullish, bearish. Didn't do anything, engulf it. But on the fourth candle, it engulfed the previous two candles. Like it's engulfing this area right up in here. It engulfed this area. So it's engulfing this previous area. So this is like a bearish form of a four candle variation, and then the market could potentially be dropping. A lot of times too, I want to point out is if you see a variation candle on like a lower time frame. So if I was on the 5 minute and I saw this, more often than not, if I went to the 15 minute, I would see like maybe a normal. I'd be seeing like a normal bullish engulfing or bearish engulfing. So if I saw like a variation, like a 3 candle variation or even a 4 candle variation, and say I was on like the 5 minute and then I scaled up to the 15 minute, I probably would see like a normal engulfing candle formation. That's kind of like time frame correlation. So you can use that as well. Like you might be on the 5 minute and you see like this 1, 2, 3, 4 pattern, and you're saying, okay, I have a bearish variation on the 5 minute, and then you're like, well, I wonder what that looks like on the 15 minute. Go to the 15 minute and you have a bearish engulfing candle formation. Okay, so that's a lot of the times you can use that. Like same concept here. If I had bullish variation 1, 2, 3, just a normal 3 bullish variation like I showed you earlier. If I had this on like a 5 minute, I could probably go to the 15 minute or the 15 minute and see something like this. If I had like 1, 2, 3, and this is on like the 5 minute, I could probably go to the 15 minute and see like it's probably going to close like a bullish engulfing. So that's how you kind of use time frame correlation. But like I said, the main ones you want to look at are like 1, 2, 3, a bullish variation, and then also normal engulfing candle formations. Bullish engulfing, normal. Bearish engulfing, normal. Okay, bearish engulfing, normal. Here's also another 4 pattern. So you have 1, 2, 3, 4. This 4th candle engulfed the previous 2 bullish candles. So that's a 4 candle variation. But for the most part, like I said, bearish engulfing, these are the ones you're going to look for the most. Bearish engulfing, and then a 3 candle bearish or bullish engulfing variation. Okay. So that wraps up candlestick analysis. I hope this video was beneficial. Like I said, with everything, go into the market and just try to spot these out. The same way I just was going down the market and just trying to spot these out. Just do that as well and you'll be fine. All right. So I'll catch you guys on the next video.